welcome to yet another video from Easy Pips Forex. And in today's video, this video is going to be part 2 of the previous video we have done. That is how to trade Easy Pips signals. And this video too equally relate to you trading signals from any signal provider. So this video is going to educate you on how best to trade signals and how best to make use of the signal that they're giving out, the pitfalls you must avoid, how to incorporate risk management, how to apply Martingale in your trading, and equally to what to watch out for in the zones that is being given out in case of there's any error that is being given out in the parameters that is sent to you. Let's start this video properly by defining what a trade signal is, or what a Forex signal is. Now, a Forex signal, that so as it's being called, or as you might have heard, a Forex signal is a trigger or a suggestion for entering a trade on a currency pair, either to buy or sell, usually at a specific time and price. And these signals are generated either by a human analyst or an automated Forex bot, and it's being supplied to the subscribers of the Forex signal service. So that is for short the brief explanation of what a Forex signal or a trade signal is. But now, if I to draw more points from this definition, two things stand out. For one thing, trading the Forex market, you are basically doing two things. You are either buying or you are what? You are selling. So that's basically the two things you are doing while trading the Forex market, and that's the same thing you do whenever you go to any market. If you go to any market generally where they sell provision, groceries, as well as supermarket, you either they do what? Either you're buying or you're selling. So in the Forex market, whenever a signal is being given, you are either buying. The signal is either telling you to buy at this particular level or sell at that particular level. And the next thing that follows is say at a specific, take note of this word, at a specific price and what? And time. These two keywords are very, very important. Failure to interpret them correctly will make you to enter a trade signal that have already hitting the take profit, thinking that this trade signal have not gotten to their take profit level because your signal provider have not posted that it has hit take profit 1. His inability to post such update might make you feel that that trade is still worth entering, and you doing that might be the third attempt of that particular support or resistance that you tend to enter that trade, and boom, you can just smash your SL, while those that entered at the right time might have made their profit from just take profit 1 or take profit 2 that have been hitting before you yourself enter that particular trade. So that is why it's important that for every signal is given out by every signal provider, it's important that whenever you're buying or selling, you buy at the specific price or the zone, and the timing should be put into consideration. So that's the main point you are picking from this definition that is stated here. So this trade call or this Forex signal, we are going to be focusing on the parameters that is being given out, and also to how we can incorporate the timing and the zones that is being given out correctly using your MT4 or your MT5. Now, whatever signal is being given out here, it's expected that the analyst have done his own part of the job by analyzing the market using whatever tools that he have within his disposal, and he find out that at this particular level you can buy at this level or you can sell at this level. So you as the end trader, you as the trader is in his Telegram channel or whatever channel he may having, you buy at this particular level, you sell at this particular level, and key in your take profit at this level, put your stop loss at this particular level, and definitely if the market get that, there's probability, there's chances that are going to make profit from it. So that's basically what our trade signal all entails. So being the fact that you are not the one that is analyzing the market is being analyzed and given to you by an analyst or by an experienced, a professional Forex trader, it's essential that you understand some basis while keying in the signals that's being given to you. And that is why I'm putting up this video to explain in details some of the terminologies that is being used, how you can be able to trade the signals correctly, not just in Easy Pips channel, in any signal group that you might find yourself, so that you can end up maximizing profit, and also to so that you don't waste useful pips, because a lot of persons I know that goes to a lot of signal group, they always been there, they can be there for 2-3 years, and yet they are doing the wrong thing while others are doing the right thing and they're making profits. So they will end up exiting one group to another group, thinking that the signal provider is not doing his job, whereas it's you that is taking the signals that is not keying them correctly. So at the end of the day, you the one doing the wrong thing, you're making losses. Those that are doing the right thing, they're making their own profit. So you don't blame the signal provider, you blame yourself. But at the end of it all, you see many persons jumping from one signal group to another signal group, thinking that the signal provider is where the fault is coming from, whereas it's you in question that is keying the signal that is doing the wrong thing. So now, for every signal that is given out, there's what's called parameters, which the definition has already given out. And what are the parameters? You're looking at a zone. Now the zone that is given to you might be buy at 20345 and sell at this. So the take profit will be given to you. Take profit is what is known as TP, and your SL is known as what? Stop loss. So that's the three terminology that is there: stop loss, take profit, and the zones. Now if you go to our channel, you'll find out that for, let me take this in, for every signal that's given out, what I've just mentioned is what you're going to be seeing out there. Now let's quickly look at the signal. Today is Friday. Let's look at the signal that's been given out today. Now if you look at the signal that's here, we said go to buy now, and this is zone. So you should buy at 2332.9 to what? 2328, and this is zone. After which take profit value we are giving out, which is take profit 1 and take profit 2, and also to the stop loss is given out to you. Whenever you are giving this trade call, it's essential that you look at the values that's given to you carefully. Now when you're having a trade at 2332.9 and 2328, the value in itself that you're seeing there is telling you that you have to do what? You have to buy. The trade call is to buy, and the take profit value are above your entry price. So whenever your take profit value is above your entry price, of course you know that it's what? That it is a what? It is a buy execution. And also too, from the stop loss, you find out that the stop loss must be below the zone value that is given. Now we're having 2326.00 as against 2332.9 to 2328. So if we are to demonstrate this, going to our MT4 platform. Now, assuming I'm giving out, let's assume this is a zone, and I marked this zone. For example, I gave her this zone, and I'm saying what I'm anticipating is that the market will come down here and it will go back up here. So of course this is a buy. So now you know this is a buy. And how do you know that it's a buy if you are new to Forex? Now let's take this down here. Let me take this down here. If you look at here, if you look at the value as here, there's 2331.32, and look at the other zone that is below here. This value that will be here must be, we'll now see that we're having two. Okay, let me even extend it. Let me even extend it down here, so that we have 2327. That's the value I have here, 2327.45. That's the zone. So we're having 2331.32 to 2327.45. So this in itself is what? Is a zone. So what the analysis is telling you is that the market should pull down to this particular level. You can start what? You can start buying immediately once the market gets to that particular level. So once it gets down here, once the market pull down here, you should do what? You should start buying, and it's anticipating the market will pull up down here. So the next thing that you are going to take note of is that your stop loss will always be below here. Your stop loss value will always be below the range, which is the zones that he has given out. So your SL will not be here. Let's assume your SL will not be 2323.01. So that's where your value will be, and your take profit will not be ahead. Maybe here we take profit 1, or here maybe take profit 2. So TP2, TP1, and the E stands for your what? Your entry, and your SL will not be below here. So this is precisely how trades are given out, and it's anticipation that, like I may mention, it's a game of probability. The chances that the market will come down there and even break below there and hit our stop loss, and also too, the chances that will come down there respect our region, respect our zones that we're given at, and we'll go back in profit. But on that thing of note you want to mention here now is that from a lot of persons that have traded financial markets, one thing that I find out that many persons does wrongly is that they don't tend to give attention to the zone that is given out. So what I meant is a trade signal is given out, and this is it. Sorry, okay, I'm here. Right, the trade signal is given out. Not until the trade gets to this particular level that is given, as mentioned here, this trade is not what is not yet valid. So the market must have pulled down to this entry zone before we can consider this trade that this trade is active or it has been triggered. So if the market for one reason or other did not get to our zone, let's say you entered at 2332.9, it did not get down there, it went to 23 let's say 3 and 5. That is where market is currently sitting at. So immediately you got the trade signal, all you did was you started entering your buys. You enter your buys, enter your buys. Now you start entering buy, the market may as well go back up a little bit, thinking that it will fly up from there. You may end up coming to this people's zone that is here. Now you that entered very early enough will now be in loss, and those that enter this signal will now start entering their own at the bottom, which are the base. Now why themselves are in profit coming up, you are still in loss, praying that not get to your stop loss. So already you already expanded your stop loss that is given us, because they give you 2326 or 00. You now want to enter, you went ahead without you checking, without you trying to find out the zone, interpreting this for yourself. You now want to go and enter at 2335 as against the 2332.9, which is the starting part of the zone, to 2328. So it's the zone. So if the market should get to 232.9, that's where Martingale comes in. So now the market gets to, assuming you are taking a trade, you have to take a trade that have you intend to enter 5 position, for example, and the 5 position you intend to spend 0.1 lot size. Now I may come in here and use 0.01, 0.01 on the first position on the first zone, which is this now will not be entered at you can enter this one at 2332 and enter that one there. Now as the market still keep pulling down, what then happen? You may end up coming now when it gets to 2330, I may now end up coming in with another lot size, which is another position. So I'm now enter, you can call it, you can now see, you now layer other position. You come in here, enter 0.01, come here with that 0.01 can be here, and 0.02. So if you look at it carefully, you have spent up 0.02 here, and here I've done what? 2, 3, 4, 4 plus 7, 4 plus that is 6. So automatically you have done was 0.06, and that's the total loss size you have spent. Now when market move down to the last zone, which is 2328, you may not end up with what? You may not enter with 0.02 and 0.02. So if you add all together, your total loss size you have now used what? 0.1. So it's more better entering them like this, applying this principle of Martingale while entering your position, than entering all position in one particular position. You enter all your entries in one particular position. Now assuming you enter a 0.1, while the market, assuming you enter a 0.1, you enter the lot size in just one position as 0.2332. That's what you did. Now the market now fell to 2327. That the market went to before it starts reversing. Now eventually reversed from that level and went back, did not even hit your take profit before it fell down again. Those who apply Martingale, who enter position at this 233 2327, 2328, 2330. These people will make massive profits from here for the fact that they split their loss sizes. And you that enter 0.0, we praying for this market to pull back to your entry price. Most time you will even be saying, okay, let me just close at my entry price, and there's no profit, no loss. It's better off than having losses. But in essence, that those who apply Martingale have made profit here, made profit here, made profit here, that if you get to the 232, which is the last band of the zone, if they decide to close everything, they are still in massive profit. You get the point now. So that's why it's always essential that when you're in your position, if you are even going to use your maximum loss size, you tend to use 0.03. It's advisable that you enter 0.01 at a particular level, like the first zone 2332.9. You wait a little bit. When you get to maybe 15 pips different from where the first position is, you come to your second position. You wait again till you get to the last band of it. But sometimes I know definitely the market will not come to the last band before it pull back in profit or even smash TP1, TP2, and that's where wisdom comes in, and that's where risk management, proper risk management comes in. So these are all you need to factor out clearly before you enter the financial market. Before you start trading signals. Like I mentioned, forex market is really business in the whole wide world where you can stipulate your loss before you enter the market. So the stop loss have already been defined, that is 40 pips or 35 pips. You're not going to lose any higher than 35 pips. So if you get that there, we accept the loss. You get to take profit 1, we book it. You get to take profit 2, the merrier the better. So that's how it rules. So the I've equally made mention of the zone, that the zone must not be taken for granted. The first you want to look at the zone. So look at the zone and ensure that the market has pulled into that zone before you enter, before you start entering your position. So it's very essential you look at the zone, and also to the timing that comes in, which is the second point that was highlighted here in the definition of the signal. It said at a specific price. We have mentioned that, which is zone, and time. Now, why do we mention time? We mention time now because in some instances, look at this signal was given out. Now, this signal was given out at about 3:57 p.m. GMT plus 1 time. Now, had it been this signal have already been played out, mainly some persons may just, it happens like this one, you might just enter now, the market may just come down into this zone at that particular point that's given out and just start going back up with just 2 minutes. With, you think just 2 minutes, market can just go up here, hit take profits, and immediately equally fall back to the zone again. Now you that saw it, you were like, ow, thank God they have dropped signal. Meanwhile, the signal provider, due to maybe it's occupied or due to other factors like maybe network issues, or it's distracted, or one thing or the other, might have not been able to feed you guys back that our trade have hit take profit 1. So now, for the fact that no message is being dropped, you just immediately went down ahead and got and start stacking your position, thinking that they have given out a trade call. Whereas those that enter the right time, they have already booked their profits, take profit 1 or take profit 2. Now you are yourself, now you're not the one taking the highest risk, because people have already ate their profit and they have rested. Now you're coming at your own risk, at your own peril, which the market may just come in here, break this zone, break this zone, break this zone, and hit your stop loss. So you might be frustrated saying, why did I say hit take profit 1? On my own end, I'm having stop loss. Is the time. So always pay attention to the time, guys. Pay attention to the times. Pay attention to the time the signal is given out, and look at how it's equally possible that a trade have been given out for like 3:57 at around even an hour after the time that's been given out. The market might have not gotten to our take profit or stop loss. It might still be lingering at the zone. So that informs you to look at the time, look at the candlestick that have been formed, that 15 minutes or 1 hour time frame, look at where that signal might have gone to. Okay, see if the market is still within that range of the zone that is being given at, then it therefore means that that signal is still still valid. So pay attention to that. Pay attention to the timing, the zone that is given at, the take profit value, and your stop loss. In fact, stop loss should be the first thing you should enter immediately you enter a particular trade. the stop loss should come in first even before you take profit, and also to learn to break even your trade once our signal is running in good profit of like 25 pips, 30 pips. Start booking your profit. And like I always say, if you're a scalper, you don't have a big account, maybe you are trading our signals like $50, $40, $70, it's essential that at the beginning of your account, while trading our signals, it's always essential that you don't wait for it to get to take profit one, because in some instances it may come to the last zone, it reverse at the last zone, and from the last zone to take profit might be up to about 70 pips or take profit one. So why wait for 70 pips when you can close your profit at 50 pips, and allow those that have larger accounts like 1,500, 300 to hold their trade, close some positions and hold their trade to take profit number one. So you that close early, you'll be compounding your profits gradually from 70 to 80 to 90 to 100, 120, 130. Then passing of time, when you keep entering maybe 4 position or 3 position or 5 position, the case may be, you might end up closing some position and break even with the other position to run to your take profit level. So please pay attention to the time. All signals given out, the timing is very, very crucial. It's very, very important, and that is one pitfall that many traders usually find themselves. So that has been said. So for now, I've been able to give answer to the parameters. So the parameters are key. Parameters are basically all you'll be given by your signal provider. So be that in mind. So now let's go to that crucial aspect of this signal or for this video. Now I'm talking about the zone. So if, for example, a trade is given like this without telling you whether good buy or good sell, I give her this signal. Say good, and I not mention, I did not specify buy, good buy now or good sell now. I give you the signal like this. What will come to back of your mind? Having look at the stop loss, what do you think this signal provider is trying to tell you? Now it's looking at your stop loss. Your stop loss is high above this level of what? Is high above this level of zone that is given at. So therefore means that the signal provider is telling you what? That you should sell. This is sell. Even without telling anything, you should know this is sell. And now this is 2034 to 2028, and your stop loss is below this zone. So this what is telling you to buy at this level. So even a blind man will understand this. So we are saying this now so that in case a signal has been given out and the signal provider decides to write maybe good buy now in one of the instances we have during this week, and I say good buy now instead of good sell, you seeing the value and the stop loss should know fully well that a mistake was done by what? By your signal provider. So all you need to do is what? Is to immediately take the reverse direction. So you just have to do the sell instead of the buy, because if you do the buy, these parameters will not enter. Your SA will not be accepted. Your take profit will not equally key in, because you did an instant execution to enter the market. So also too for the buy. So bear in mind that if you are entering a particular position, if it's a sell, your stop loss is above the value of the zone, and if it's a buy, your stop loss is below what? The value of the zone. I think that alone has explained all you need to know about the zone and how to interpret the signal has been given out. So a signal of this nature, on your own, you can be able to tell, okay, this is a sell, this is a buy. My signal provider is telling you that when you get to this particular zone, it's anticipating the buy. If you go to this particular zone, we're anticipating what? A sell. Now, come to the other areas of the signals I usually give out. For the signals I'm giving out, there are 2 terms that I usually use. I want to differentiate them now so that you don't make mistakes henceforth. I want you to take this weekend off to digest all I'm saying in this video, because they're very crucial. Because we want to make the best of 2024. We don't want to be having wasted pips any longer. If you are making profit, maximize it. If you are making losses, we want to minimize it. I want to ensure that everybody in this signal group, they are all up and running. They are making profit from this signal channel. Whether free members, whether they are premium members, I want everybody to make money from this channel. And that is why I'm putting up this video, taking my time now to record this video, give the best explanation I can give, so that you at your own end can take out time to watch this video, think deep about what I've said and apply them, so that you can make 2024 the best of the best year of you trading the forex market, and to be a thing of joy that you are trading our signals and you're making profits, as well as referring your friends, relatives, and the rest. Those that don't believe in forex market will start believing in forex market and forex pays. A lot of people have been in this journey for like 5 years, 6 years, no evidence. But you that might come in now within 4 months and 4 months, 3 months, 2 months, for the fact that you're in the right channel, you can make your money faster than those that are in those, how will I call it, those other channel that don't know what you're doing. So now let's start. Having said so, there are some signals I will give out. I will say goodbye. Sorry, I may say goodbye or good sell. And there's a difference between good buy now and good sell now. Let me differentiate them. When I say good buy now, I'm telling you that the market has pulled down to our zone. Good buy now or good sell now, the market has pulled down to our zone. So at this point, you can use what? Instant execution. When you are entering your position, the market has already pulled down to what? Pulled down to our zone. So you can apply what? Instant execution. But on the other hand, if you are using, if you see me post good buy or sell, I'm trying to tell you that the market has not gotten to our zone. For that reason, you want to keep on the watch. Once the market gets to our level or our zone, you can start entering your position, or you can do what? You can start keying pending orders. So when the market gets to that our zone, you will be activated, and whenever it goes to our favor, your profit, your take profit will be smashed. That is if you be distracted and you not be fully active to monitor the market as it's moved to our levels. So good buy now means that the market has not got to our zone, so you can apply pending orders or wait for it to pull down to our level before you start keying your position. But whenever you see good buy now and good sell now, the market is already there without waste of time. Start what now? Start entering your position, or wait for, you can enter a few positions, wait for it to pull down, enter at the middle of the zone, the last band of the zone, the first phase of the zone, enter your position. Key your take profit and your stop loss, allow the trade to run. Just trust me as the captain to allow my analysis to just run. Key your take profit and stop loss, allow the trade to run. The only thing I want to do is that whenever I tell you to adjust your SL, adjust your SL. Whenever I say break even your trade, break even your trade. If I say close out your profit, close out all profit now, the market will change direction. Just take my advice, close up position, because what I'm seeing at my own end, you're not seeing at your own end. And that's the reason why I've done my analysis before giving that inch signals to you guys. So I think I've said a lot on that. If you go back to the channel, you equally see it there. On this particular one here, you see now that I may mention of good buy now. So the market is already there, so there's no point waiting any further. All you need to do is just to enter the trade and off we go. Now if we look at other signals I might have given out, let me see. Look at other signals I might have given out. There are others I'll just write good buy in other signals. So if you see good buy in any signal I'm giving out, I most times may even write pending order attached to it. I'll just write pending order, and once the market is active, I will now write it has been triggered or our setup has been activated. Let me just say good buy, for example. Now if I can see, okay, this is a perfect example. Now you can see. So now this one I just said goodbye at this particular zone. This market is not what, it's not yet active, and come down, maybe most likely I will write, okay. So you see now I said goodbye, the market is not yet active at that particular level, so it therefore means you have to wait for it. So this one is goodbye now. Let me look for the one that says goodbye only. Can I get it? Goodbye. Okay, I think there's another one here. Okay, good. This is a perfect example. So on this one, I said I gave her the zone goodbye at this level. I gave her my stop loss. I gave her take profits. I said use good money management, and I said kindly wait till it retreats to the zone before you enter your position. And I put an exclamation mark telling you it's very important that you do so. So this in itself explains everything. So from today onward, kindly do the right thing. That aside, next I want to make mention of very quickly is this. Now whenever you see me post this sticker and it says standby, all I'm trying to let you know is that the signal will drop any seconds from now. Once I drop this, I've already typed my signal already. I'm just waiting for it to drop to the zone that I wanted, or I want my confirmation to be gotten correctly, and off I release the signals. So if you know you are always receiving the signals late, it's most likely you don't pay attention to the sticker that I'm giving out. So once I say standby, stop whatever you're doing, just pay attention to the Telegram channel, and hopefully that in any seconds, in any split seconds from now, can be seconds, can be 5 minutes, can be 3 minutes or 10 minutes, the signal is going to roll out. So standby is just to prepare you that you should be ready, fully ready and active to key the signals that I'm giving out. So understand that sticker whenever you see it. There's another one I usually use. You can see standby, standby, standby. So there's equally another one. I might use this one now. Okay, good and fine. You can see this one. I put attention. So whenever I'm having attention, most times to pass an announcement, either to adjust your SL and rest. And you can see at this one I said zone are triggered before we start seeing profit at the year. So zone are triggered, our pending order, the market has got to our zone and it has been triggered. And thereafter we went on smiling with some good pips. So that is that. Now the other thing I want to make mention of very briefly have to do with an execution of this nature. Now, whenever you see me type this high risk, what I'm telling you now is this trade signal, the probability of we making profit, which is probability of our loss to probability of our profit, is 70-30. There's 30 to 70, there's 30 to 40% chances that it will hit our stop loss, and there's 60 to 70% chances that it will hit our take profit. So whenever you see high risk, if you enter five positions while trading as signals. Whenever I put high risk, I'm expecting to limit your orders. Instead of using 3 positions, you can use what? Instead of using 5 positions, rather you can use 2 positions. And if you are using 2 positions before, you can use what? 1 position. Or if you choose to enter your 3 position, don't wait for take profit 1 or take profit 2. Whenever you get 25 pips or 30 pips, close your profit and go. There's no fast rule trading signal. You must wait for it to hit take profit 1. Especially for those that have those phobia for holding trade for long. And many persons, whenever they see red, their heartbeat start increasing. Bing, 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 bing. They're less comfortable seeing blues. They can't hold on trade for long because they don't want the blues to change to red. So for that reason, whenever your trade is running 20 pips or 25 pips, my advice is close your trade and go. Allow those that can hold on to trade to take profit 1 and 2, and they have the account to do so, to currently utilize what they have. So high risk, like I mentioned, the probability against us is the odd against us is much. So try to stick with it. I will usually give you a trade that's showing high risk, and the others I will not put a high risk. So the one that are not with high risk, those are moderate. So the chance of we making profit is 80%. The one of high risk can be 60% or even 50%. So whenever you see this, please pay close attention. Limit your entries, limit your orders. And if you are those trading with $40, $30, it's not even bad if you ignore such kind of trade. You can just ignore this trade, because most times this trade setup usually come up during the New York session, and it's very, very volatile during that time. That's why we have a lot of fundamentals. So within split seconds, you can blow, you can hit our SL, and you can hit our take profit. So always bear that in back of your mind. So those are some things I want to clarify on this video. So now let me quickly look at what else I'm missing from the list of things. So I will quickly mention high risk and rest them here. Good. Now, one thing to equally mention is that a lot of persons who trade the forex market don't know how to break even their trade. Break even your trade simply means, assuming we enter a trade that is running at 2380.00, and is currently at take profit number 1. That's it. Take profit number 1. I said adjust your break break even your trade, as I mean to say. I ask you to break even your trade or adjust your SL to BE. All I'm trying to tell you now is that you modify and key in this your 238000, which is the entry price. You will key in at your stop loss. So the event that the other trade you are holding to take profit 2 should fall down, it will hit you at what? It will hit your entry price and to close you on 00. I think I've done a video that I've posted on the channel before now. So you can watch previous video I've shared on the channel so you can see how I break even my trade in order to avert any other loss that may come in, and whenever it does, we close us on 00. No profit, no loss. So that is for that. Now, before talking about risk management or good money management, I find that one thing in the forex market, for you to be profitable in trading forex market, it's not when you take up to about 5 trades per day, or not when you take up to 6 trades per day, or not when you take up to about 10 trades per day that's make you profitable. You can end up being profitable for 3 trades, and the next 2 trades, due to overconfidence, you may give out the money back. And for that reason, you find out that we here at Easy Pips, we don't give more than maximum of 4 trades per day. That is if the market conditions are very suitable. We give 4 trades per day, and in some instances we may even give it 2 signals per day. What matters most trading forex market is how much profit do you make at the end of the day. Profit and loss, with profits and loss that you may incur, what is the profit you have at the end of the day and the end of the week? That is what matters most. Not the number, not the quantity of the entries, not the quantity of the entries you enter in each day. It's the quality of trade that you enter and how much profit you are making per day that matters. We are trading a market that carries a high level of risk. For that reason, we try as much as possible to ensure that we protect our capital and equity. I want to end up being profitable each week despite the loss that we might incur. For that reason, guys, if Easy Pips signals gives you 3 signals and they all hit take profit, or they give you 2 signals and they have all hit take profit, stop jumping from Easy Pips to another channel and be entering other channel signals. That's the reason why many persons don't grow on this channel. I'm just emphasizing this now. So persons who come into my channel, they will make profit. Maybe we drop 2 signals, they are done. We are done with the trades, and I've said, okay, we are done for trading for today. See you guys tomorrow. Others will keep hunting for other signals to enter. They'll go to that signal group, check here, check here. At the end of it all, though, luckily, they might enter other trades elsewhere from other channel. They might make more profit. Kudos to you. But to many others I've seen, they will end up blowing their money. Maybe they traded $50. At the close of that day, they made extra $15, $12 to $2. Now, when they end up trading other signals, adding into it may not even be gold that will trade. Might be some we usually go and trade maybe US30 or Euro USD or CAD JPY or also call. They enter other trade signals and they end up losing maybe $30. They will come back again, even below where they started with my signal channel. Now they'll come back again. When they manage to grow their account from 30 to 100, they will go and look for that signal that is that people that posted, these people, their signals are good. They will enter again, they will blow their signals and come down here. If you look at all the signals I've been giving out, they are about 95% win ratio. We take out our time to ensure that we give out high probability setup. We don't just pick out signals and give out. So avoid jumping from one signal channel to another signal channel, from one signal group to one signal group, from one telegram to one telegram, WhatsApp to another WhatsApp, trying to always looking for trades. Be contented with the signal has been shared. If it's 2 signals and they're in profit, so be it. Even if the 2 hits SL and we say we are done for the day, let it be so. So that we know that all of us are growing together, from making losses to making losses together, and be rest assured that I will always recover each loss. I repeat, I will always recover each loss, either same day or the following day. So loss is part of the game. We are aware of that, and we know that we are going to cover for it. So for those who are coming here and trading our signals using demo accounts, they're just wasting pips. How long will you continue to trade demo accounts? When your mates are trading live account, they are growing account from $50 to $200, trading account of $30 and increasing it to $200. Some are creating $50 carrying to $250, $300 within a week using our signals, and you are there trading demo month in, month out, month in, month out. How long do you want to keep trading demo account, Mr. Demo? How long will you want to trade? You want to have a meta trading demo account before you fund a live account? A demo account is just meant for you to test run what you have upstairs. Maybe you have what I call it now. You have a strategy you're working out. You want to look at how profitable that strategy is. Good and fine. But you're not doing any analysis. We're the one doing analysis for you. So why keep trading our signals using demo account? Okay, good and fine. You want to know the win rates that we have in good. But if you have done that for first month and second month and third month, and you've seen the success rate, now you have grown, you have flipped your $100 account to $400 account, or you have flipped your $100 account to $500 account within space of 3 months or 2 months. How long do you want to keep trading that demo, Mr. Demo? This signal channel is targeted to making people, to change people's life, to make people millionaires, to preach to others that Forex pays, to help family members, those who are not standing well, to stand on their feet again. And that is why we are putting up this signal channel. Many of the signals, 95% of the premium signals that I'm even giving out, 90% of the premium signals are equally given out to free channel. And there's a reason why we are doing so. 90% of the signals that I shared is given to both premium and signals and the free subscribers. The sole essence is to ensure that everybody is on board, compound their earning, grow their accounts. Everybody is eating from the spoil, because not everybody can be able to afford the payment of a premium subscription. So that I'm aware of, and that is why we decided to look into it. And if we are trading 5 setup a day, we'll give the free signal members maybe 3 or 4 per day. Sometimes we will give out all the signals for free. So stop trading demo. This is the 4th month running out. By few days from now will be in May, and that is the 5th month. And you have been saying this year is your year. What else you want to do again with 4 months already roll out? It's time for you to sit yourself down and think deeply into what I've just been saying now. Time waits for no man. Now that the market condition is still very favorable to us, seize the opportunity for that account today. If it's $50, fund it. If it's $100, fund it. If it's $200, fund that account. Trade that account conservatively. It's not a must that you have to stack positions because you are seeing me stack positions. Whenever I stack position, I've already done my risk management. I've already done my money management. I know how much I'm going to lose per each position. Even if I blow the account, I have other accounts that I will trade, because I don't trade only one account. So don't allow the post of others. Don't allow the profits that others are posting. Maybe they have $100 accounts and their entry position of like 0.01, 20 positions. See that people, other videos, you see them flipping $100 to $500 within 2 days or a day. If you are going full margin, you lose your entire account. Because many persons who are trading forex market now currently in this channel might be those who are struggling. So I don't want you to just blow your money and start looking for money again to fund again. So trade your account conservatively. So I think that is a very wise advice I've given there. So anybody who wants to stay here for long should think deep to all I've said now, and take the action. Seize the opportunity now. Let's make hay while the sun shines. So now let's go to the last part of this video. The last part of this video is going to talk about money management. Now, risk management, which is called money management, it's one of the most important topics you will ever read about trading. And why is it important? Good question. Well, we are in the business of making money. We are in the business of taking lots of risk. And in order to make money, we have to learn how to manage the risk, which is potential loss that we are going to watch, that we are most likely going to be having. So if we are in a business that involves a high level of risk, if you are doing a business, you are trying to set up a business that have a high level of risk, what do you think is the best thing for you to do first? So before you jump into that market or jump into that business that you tend to do, you have to sit yourself down, look at the risk that is involved, look at the profit that is involved, then create a strategy for yourself that, okay, good and fine, This is what I will start with. Whenever I get to this particular level, this is what I will do. Whenever I get to this particular level, this is what I will do. Whenever I get to this particular level, this is what I will do. So you already have that established rules down before you enter that particular business. So also too is forex trading. That rules you already established down before you enter the market is what's called what? Risk management. So that risk management is what will guide you whenever you are trading forex market. So as your account keep compounding from $100 to $200 to $300, $400, $500, you stick to your what? To your risk management you have already laid down. And it's only traders that stick to their risk management or money management that survive year after year. The others will come in there and give their money back to the forex market. Let's continue the definition. He said, ironically, this is one of the most overlooked areas in trading. Many forex traders are just anxious to get right into trading with no regard for their total account size. So if you are trading without risk management, you fund the first account, second account, third account, fourth account, fifth account, and no result to show for it. You keep blowing accounts. What will you say? I beg, forex is not meant for me. Forex is a scam. Others are just posting it. I beg, leave them. I've tried it. Forex not work for me. Okay, you're the cause of your problem. Whenever you're trading forex market without risk management, it's more or less like you are gambling, and you see the terminology below here. You see, they simply determine how much they can stomach to lose in a single trade and hit the trade button. There's a term for this trade of investing. It's called what? Gambling. So whenever you are trading without knowing your losses, you are what? You are gambling. And forex traders that want to stay long this market don't gamble. And that is why the difference between those who play sport betting from forex trading. It's true that they'll bring 20 naira today, 20 naira to want to win 5,000 naira. They'll bring 200 naira, want to win 2 million naira. Forex market is not so. We are not money changers. We don't come here to double money. We're not, how would I call it now, money doublers. Forex is not a get rich quick scheme. Forget many of the videos you watch on YouTube. Forget many of those videos that are done there. They're being falsified. If you want to stay long this market, you have to take this area I'm talking about, risk management, very seriously. So for each account you are having, you must have done your calculation of how much you are going to lose. Now, take for example, assuming you are having a $100 account, and your intention is that for every trade position you are entering, you are going to risk 10% of this account. If you are risking 10% of this account, how much are you saying you are going to lose? You are going to lose just what? $10. So you are comfortable to risk $10. Meaning that if the first trade should go against you, you only lose $10 and you have how many dollars left? You are having $90 left, and that's very decent. You are still having 90 to what? To trade the next day or to trade the next signal. Now, if your risk to reward ratio happen to be ratio 1 to 3, meaning that if you are losing $10, if you go in your way in your direction and hit your take profit, you'll be having 10 times 3, that's $30. So assuming you enter second trade and you lose under $10, you now be having left $80. Now in the next two trade sessions you enter, they all smash your take profit one, and you're now having $30 on the other one. If you add 30 to here, you now be having $110. And the second one hit your take profit, you now be having $140. What do you think would have happened if you have decided to enter a trade without stop loss and the market fell down massively without you incorporating your stop loss? What would have happened? You would have ended up giving your entire $100 back to the forex market. So first thing first, trading the forex market without entering stop loss, my brother, you are gambling. Nobody make his fortune that way. And you have a trading financial markets and your intention is to risk $50 per each trade. What your ecology is what? You over leveraging. You are taking what? You are taking excessive risk. So per each trade is vital. At least you can do 5% per trade, 5% per your equity. 5%, 2% is decent. 2%, 5% is decent. As you compound your earning, as your earning keep growing conservatively, you can say, okay, good and fine. I've grown my account from $100 to $500. I can decide to what now? I can decide to increase the percentage of my of my loss that I'll be having. So instead of doing 3% or 5%, I'm decided to increase to what? To 10%. So guys, I'm going to add to this video, I'm going to add a picture, an image to it, showing you the different lot sizes you should be using in each particular equity that you'll be having, so that you know the lot size you'll be using, and divide that maximum lot size you'll be using. You can divide by 5 or 3 and apply martingale whenever you are trading as signals. So I think I've said a lot. Please, will draw the curtain for today's video. I want to thank you for your time, for watching. I wish you guys the very best of the best trading as signals, and also too, I wish all my viewers the best of the very best trading in the forex market this year 2024, and hopefully we are going to get many millionaires this year 2024. Until then guys, if you like this video, give it a thumbs up, subscribe, like and comment. I'll see you guys in subsequent video. Bye for now.